Hi guys, welcome back and thanks for watching another recap of the last 24 hours and the outlook for the next 24. So coming into the trading session today, the market was optimistic about the prospect of stimulus from central banks around the world. We are starting to get a look at the economic data from last month, which will begin to shed some light on the impact of the coronavirus as far as hitting the global economy. China reported the weakest readings on record for the manufacturing PMI and also for non-manufacturing PMI. Shortly after the open, the US reported manufacturing PMI and it came in a hair above the 50 level. So readings above 50 suggest expansion, while readings below 50 suggest contraction in the sector. This reflects concerns surrounding supply chain disruptions related to the outbreak. Construction spending increased by the most in 2 years, hitting a record high in January. But remember, this is from before the outbreak, so it didn't get a lot of attention from traders. To quote Reuters, the ISM said 14 industries reported growth last month, while 3 contracted. Manufacturers of computer and electronic producers said the coronavirus is wreaking havoc on the electronics industry, adding, "It's a mad dash to dual source stateside in case China isn't back online soon," end quote. Looking at the calendar for the week ahead, we've got ISM non-manufacturing PMI coming out on Wednesday. And then this Friday is non-farm Friday, where we get the average hourly earnings, the headline jobs number, and the unemployment rate. It's going to be the biggest scheduled data release of the week. So these scheduled data releases, along with continuing headlines, should provide direction for the market coming forward. So there's going to be quite a lot going on. Should be a pretty busy week. So those are the primary fundamental drivers of sentiment today and potential drivers that are coming up this week. So let's jump in and take a look at the price action. This is the daily chart of the S&P futures contracts. This is about 13 minutes before the cash close. And we're currently, we sold off initially down to this level that we noted in the last video, very, very close to meeting it exactly. Let's put in a level there. So this level here did provide support and is going to be a major line in the sand going forward. Overhead, we've got this level up here. So that's roughly 30.75, that zone. With support coming around 28.50. So those are going to be the major levels. We've also got the 200-day that we're poking above right now. So let's take a little closer look here. This is the hourly, and these are the levels that we've been watching. This has not been updated since the last video I did last week. So let's clean up these levels. So this level of support did provide support. Doesn't really need to be updated too much. So it's just going to be considered a zone. The 2900 level came into play today, so it looks like it may provide a zone moving forward. This is also a daily level. We did kind of struggle with it a little bit. I'm going to drop the weight of it back down though. And I'm actually going to make that a dot. It's not a very major level. Also this one, update that there. These can go. This level, still very important. It's kind of more of a zone right now. This is the 3000 level. I'll just bring this over. Okay. So we're currently breaking right now this level. We'll see how it acts moving forward. Let's also, and once again, I'm looking at the hard right. I'm trying to pay attention to the last time price was there for putting in these levels. If we've chopped through it, I'm either going to update it or remove it. So for example, this high here, we traded through it, chopped around it. It's not very, it's being disrespected by the market right now. Honestly, the biggest level that we're looking at is this 3000 level. If we can establish ourselves above it, it's going to be pretty, it's going to provide a level of support and resistance, almost guaranteed, as long as the 200-day moving average is in this region at all. So let's drop down to the 5-minute and review what we did today. right, so we opened up right here on this candle. Let me pull out my rectangle tool. So there were a couple levels here. This actually ended up being the trade of the day, probably the retest of this level. However, there was a level just above it, so it's kind of pretty volatile price action. So we had these highs that we put in about an hour and a half or so before the market opened, broke them very strongly, came back down, created another level just above that, broke it, ended up testing this level for support, broke this one pretty cleanly, and then continued to move up, broke these highs, which would be the post-break highs of this level. So this level was broken. The post-break high that was put in there was broken and tested for support. And then we moved up to test this level here, which the market failed at because it wanted to come down and test this very major 3,000 level. So that's going to be the biggest level to watch for now. And we've currently just broken the highs that were put in the late morning session, that level specifically. So let me get rid of some of these. I'll leave that in there because it's maybe relevant in the future. Tighten up these levels. So yeah, this is the market rallying on a combination of things. We've got a technical bounce, could be a combination of short covering and buy the dip trade coming into play on hopes that stimulus from global central banks is going to provide support to the market. It's going to be pretty interesting to watch. So going into the close here, we're testing this major daily level. This is the 30.72 level. Let's make sure we've got that highlighted here. 30.72. All right, so yeah, we're coming up to that now. This is probably going to be a pretty powerful level. So we're going to have this level above us. We've got the 3,100 level up there and the 3,000 level. So these are going to be the most major levels of support and resistance. If we manage to break this strongly and hold above it, it can provide support. We've also got the potential for sellers to start coming in these levels too. Just once again, keep an eye on the 200-day, which right now is around 30.50 or so. So there's quite a few levels. There's a lot of volatility. The average range of these bars continues to be several times what it typically is under normal circumstances. So very clear lines in the sand for us to monitor, and we'll check back in 24 hours and see what happens. Just a quick update here. As soon as I stopped recording, we got some headlines coming out that I thought would be interesting to take note of. There is Pfizer's Dolsten says we have identified compounds that have a high probability to be effective against the coronavirus. So there's a lot of these things hitting the headlines. Rand Squawk just did a quick recap and noted that across trading desks, there's really no clear reason for the bullish price action, and suggested that it could potentially be technical in nature. But I thought that was interesting to note and wanted to come back and record that just for the record.